Good morning, students. Now we'll be moving in our next chapters, and this will be our second book, that is Statistics for Economics. And chapter first of this book is Concept of Economics and Significance of Statistics in Economics. So here, let us try to understand. According to a given syllabus, we will be learning about what is economics, meaning, scope, functions and importance of statistics in economics. Here meaning, scope and functions and importance will be related to statistics in the economics, and what is economics will be understanding as a separate topic here. Now let us stand what is the concept of economics says. Here the concept of economics is a topic we advise the young learners of 11th class to comprehend the concept of economics through the following discussions relating to ordinary or routine business activities of your life. So economics is everywhere in your daily routine. Whatever you are doing, it involves some kind of economics in it. How? Question asked, if how can you say that this economics is related to our life? Suppose you are going to market for buying some goods. So definitely what are you doing? You are actually involved in some kind of activity. This activity here is consumption. Consumption is the thing which is just directly related to expenditure. When we say consumption, we buy something and we do expenditure. And when do expenditure, then what happens? That the money which you pay becomes income of somebody else, which income is spent by that person to someone else, and that income will be of income of somebody else. So this is how the economic activities are connected everywhere. Now every individual, ranging from child to an old man, is engaged in some economic activity or the other. Consumption is an important economic activity and we all are consumers, consuming different goods and services for the satisfaction of our wants. So here what we do, why do we do the consumptions? We are simply doing consumption because here we want to satisfy our wants. When we want to satisfy our wants, we buy some goods or maybe services. Why we do we buy? Because it gives us directly satisfaction. So we all are consumers and we do consumptions. Okay. Now the question comes that who is a consumer? So a consumer is the one who consumes goods and services for satisfaction of his wants. A consumer can be anyone, anyone, any person, any institution who do the consumption or doing expenditure. And why it's doing so? Because he just wants to satisfy himself. Okay. Now what is consumption? Consumption is the process of using up utility value of goods and services for direct satisfaction of our wants. Utility value of goods means inherent capacity of goods and service to satisfy human wants. So as we know that each and every good has got some utility, and that utility can satisfy our needs and wants. So that is why we purchase different types of goods and services, and it just gives or fulfills our wants. So consumption is nothing but it is a process in which we use the utility of the commodity. Now production is another economic activity. Here in economics, first topic which we have learned here is consumption, and consumption is definitely done by consumer. Now here they are telling that production is another economic activity. Consumption is also an economic activity. On the other side, you cannot buy this all these kind of goods and services without production. If somebody is producing, that's why it is possible for you to buy some goods or services. Okay. So here production is another important economic activity, and many of us are producers engaged in the production of different goods and services for the generation of income. So why do we produce? If a company is producing, why it is producing? If a teacher is teaching, why is teaching? If a lawyer is fighting case of someone, if a doctor is looking after the patient, they here all are providing some kind of services, production of services or production of goods. So here why it is done, the question come, what is the need to do such kind of things? In economics we can say this, that it leads to generation of income. When we do some economic activity, what happens? The income is generated. Okay, because when you do something, definitely you get paid for that particular thing. That is your income. So here production leads to generation of income. Now who is a producer? In when we talk about this production as an economic activity, the question comes, who is the producer? So producer is the one who produces and or sells goods and services for generation of income. Simple. So here a producer is any person, any institution who is simply producing because they want to get some income generation. That's it. Now what is production? Production is the process of converting raw material into useful things. Things become useful as they acquire utility value in the process of production. So production is called as production when we add some value to the raw material. Like if you take example of cotton as a raw material. So cotton you cannot wear. What do we do with the cotton? We make threads out of it. Then that thread will be converted into cloth, and that cloth will be purchased by some company which will be making or manufacturing clothes. So in this way, what are we doing here? We are changing the shape of the raw material. So here that's why they are saying production is the process of converting raw material into useful thing. Now shirt is useful for wearing. If you think about cotton, it cannot be wear, it can be used for some other purposes, like if somebody has got hurt, so that can be done. But still, if you say that it should be, the form of that thing should be changed. When you add some value, then it is called production. Similarly, even if this cotton is used for healing these wounds, or if somebody got hurt, we put some cotton, so even that cotton is sterilized by some processes. So it will be not sold at the same price like a farmer is growing cotton, so that cotton will be processed first. So it will be like that some value will be added. If suppose that farmer is selling that cotton at 50 rupees per kg, and suppose a company is making some bundles of it and selling it in the market, so they are going to sell it at 150. They will add 100 rupees, may be possible. So 100 rupees will be added to that raw material which was cotton. So here we can say that value has been added, and this value addition will lead to income generation. Why? Because somebody has done process of value addition in that thing. So this is also an economic activity. This is called production, when value is added to some good, and actually when we do like that, we add some utility, we bring it some usefulness of that product, so that it will be sold in the market easily. Now saving and investment are also economic activity. Now this is the third thing here. Now, it is also an economic activity, and many of us are savers and investors. We save our part of income for future consumption or for investment in share and bonds to generate income. Now, saving and investment are also important economic activity. Now, saving is the thing when we get salary. Suppose we spend some money, and definitely some part of that money will be saved. Okay, every it is not like that each and every rupee will be spent in the market. What we do, we do the saving, and after that saving, what we do, we are not going to keep it with ourselves. Most of the savings will be kept at the banks. Why do we keep our money in banks? Many people does like that. So what is the reason behind it? Actually, when you do like that, your money is actually invested, because the bank is not going to keep your money with itself. The bank is going to lend out that money in form of loan to the borrowers. Whoever needs money, the bank lends that money to him or any kind of company, and on that money they will be charging some kind of interest, which will be their income. So saving and investment are also economic activity. So if you are purchasing land or investing in share, bonds, debentures of the company, or opening bank account, investing in fixed deposit, recurring deposits, post office saving accounts, NSC, National Saving Certificates. So all these are investment opportunities, mutual funds, insurance. So you are doing investment. So this is also an economic activity, because again this thing will be investment. Why investment is important? Because when you invest money, somebody will use that money actually. Okay, for example, suppose a business is there and you purchase its shares. So what happen? You are purchasing share, but you are paying money, and that money will go to that company, and then company will invest that money into its business. Maybe company will buy machinery, it will start a production, value addition will be done, more income will be generated, more employment will be given. So this is a was also very economic importance of economic aspect of the economy. So you cannot neglect saving and investment, because investment leads to generation of income. Now what is saving? Who does the saving? It is that part of income which is not consumed or spent. It is an act of abstinence from consumption. So when you are not spending of your money, what you do? You actually save your money. Okay. Now what is investment? It is expenditure by the producer. So if you're investing money, then it will be treated as expenditure by the producer on the purchase of such assets which help to generate income. As I told you that if a company is getting money, then they are going to invest it into their business. So what are they going to buy? They will buy such assets, means machinery, machinery which helps to generate income. Okay, because by machinery they'll be doing production, and production the goods will be made, goods will be sold into the market, and they will get income. Okay, so saving and investment also important. Now what is an economic activity? Now, as you already seen, consumption, production, saving and investment, all are these economic activities. Now here, what is economic activity? Is an activity which is related to the use of scarce mean, also called as scarce resources, are always scarce in relation to our wants. Imagine yourself as the richest person on the earth, still you can't have everything you wish to have at point of time. It implies the scarcity of your means, resources in relation to your wants. So what is economic activity here? Economic activity is the use of resources which are limited, means we will have to use them rationally. Okay, so even if the richest person is there in the on the earth, so even he cannot satisfy himself, because the resources are limited. You cannot get each and everything what you want. So here you can't have everything you wish to have at a point of time. So this shows that a scarcity is there, and we will have to use our resources which are scarce in relation to our wants. So actually we will be doing an activity, economic activity, by which we try to satisfy ourselves by the given resources or limited resources. So this is all economic activity is all about. Okay, now how would you distinguish between economic activity and non-economic activity? Draw the list of economic. This is learning by doing concept. So you should know what is economic activity and non-economic activity. So suppose at your home you can do this activity. You can simply do, like, for economic activity, you can produce something and sell it to someone. Okay, so it can be a sandwich or anything. You can make it for 10 rupees and you can sell it for 20 rupees. So 10 rupees additional income you have earned. So this is what income is generated. This is economic activity. So another thing which you can do, you can just wash your dishes at your home and don't take any kind of money from your parents. So what will be this? This is just a non-economic activity. You have done work, but you have not got any kind of money here. So why you have done it? Because you had got just some kind of mental satisfaction by serving your parents or by helping your parents. It gives you peace of mind. So that's why you have done it. So this is a non-economic activity. Like a doctor is looking to his patient. So he is going to take fees from his patient. So this is economic activity. Okay. What is non-economic activity? Suppose the same doctor is looking after his son and doing his treatment. Now is he going to take any kind of fees from his son? No is the answer. He is not going to take any kind of fees from him. So what will be here? This will be a non-economic activity, because this is just done simply for some psychological satisfaction. Now, scarcity is the undercurrent of economic problem and therefore of economics. So scarcity is definitely there. We don't have resources, and any country is not rich in everything. Like in India, if you need crude oil, so in India there is not abundance of crude oil. That's why we are importing crude oil from other countries. So here this is the economic problem. So resources are always scarce in relation to our wants. Also the resources have alternative uses. So what are the thing? Resources are scarce, yes, means they are limited, and also they have alternative uses. Like coal can be used for cooking purposes. Coal can also be used for making iron or iron goods. So here two alternative uses can be seen. There are other uses also. Okay, so here we can say that there are a lot of things, like in by coal you can produce electricity also. So here you say there are alternative uses, so you have to use these resources in order to maximize your satisfaction. A 10 rupee note in your pocket may be spent on a cup of coffee or a cold drink. Likewise, a worker may render his services in a factory A rather than B and C, because resources are scarce and have alternative uses. We cannot escape from the problem of allocation of limited means of two alternative uses. This is what we call economic problem, or the problem or choice. Now suppose you can get, suppose you are having money, you can buy a coffee or a cold drink. So it depends that your money is limited, you can just satisfy yourself by getting coffee or cold drink. Suppose you are having only 10 rupees, so this is a limited resource. Now what can you buy? Either coffee or cold drink. So you will have to, if you spend on coffee, then you cannot get the cold drink. So you'll have to think rationally that which thing satisfies you the most, and then spend the money. Okay. Here they are talking about the workers also, who are rendering services in the factory A rather than B and C. So suppose a worker is there, he is working for factory A and he is not working for factory B and factory C. So in this case, what will happen now? He is also resources, human resource. Okay, so he is providing his services for A. At the same point of time, he cannot be present at factory B and factory C. So this shows that if even if a person is rich, suppose somebody is getting giving him lot of money, suppose B is offering more money than A, so what will happen? He will move to B and he will be working over there as an employee. Now what will happen? He will have to leave A company, okay, or factory A, he will have to leave. So in this case he will be working with B and not with A. So again the thing is that the resources is one, only one person is there. He can be shifted from one company to another, but at the same point of time that one person cannot be used by company A or factory A, factory B, factory C. So you can see that a person at a time can work at one place only. So okay, this is an example of limited resources. Now what is economic problem? The economic problem is, it is a problem of choice. It means allocating of the resources to alternative uses arising on the account of the fact that resources are scarce and there having alternative uses. So what is economic problem? The first economic problem is that the resources are limited. They are not in abundance. The first problem. The second problem, they have alternative uses. Means you will be having choices to make different thing with one single thing. Like coal, I have just given you example. There are multiple uses of it. So this is an economic problem. So suppose you are prime minister of any company, and according to you, what do you think, what should be the best way to handle your resources of a country? Coal. So if you think that the coal should be used for making electricity, because electricity is a big problem in your country, then you should put this or allocate these resources towards that side or making electricity. Same way, if you think that coal should be used for some other purpose, say for example, you want industrialization in your country, then coal will be used for industrialization here. So you will be having this coal, and by that you will have to make iron and steel uh, goods for that, because if you want industrialization, then you will have to allocate these resources for making steel and iron. Then only capital goods can be made, industrialization can be done. So this is called as allocation of resources. So why we are allocating like this? We are deciding what can be the best, because we are dealing with this economic problem, because this all these resources are scarce, and second, they are having alternative uses. So these are the economic problem, how to allocate, because they arise because of scarcity and multiple choices of that good. Now, economics is essentially the study of economic problem that we must confront, owing to the fact that our means are scarce in relation to our want, that the means have alternative uses. We already read this thing, so no need to go through it now. Now, what is consumption? Here, we as a student of economics study behavior of human beings as consumers or buyer of different goods and services for the satisfaction of their wants. As consumer, people have limited means, while their wants are unlimited. How do they allocate their given means or income to purchase of different goods and services given in the market price so that their satisfaction is maximized? This is the study of consumption or the study of consumer behavior. We have a formula to set a standard relationship like the inverse relationship between price of goods and its purchase, explaining how consumer tends to behave. We call it consumption theory. So what happens here? They are telling that if the prices of the goods and your demand, it will be inverse relationship, because if the prices are falling, your consumption will increase. If the price will increase, your consumption will fall. So the demanding will be less when the prices are high. When the prices will be less, the demand will be high. So this is vice versa relationship, and definitely the consumer will be having some money with him, and he will be using that money to maximize his level of satisfaction. So he will be giving priorities to the different things be within the given resources or given income. He is going to maximize his level of satisfaction by spending money on different types of goods and services in order to get the satisfaction level. Okay, so this is the economic activity called as consumption. Now, what is production? We already read about it. Production, a producer have the limited means, while they have a wide range of goods and services to choose from for their firms and factories. Given prices of different inputs, how do they choose such combination which are least expensive, so that they are able to minimize their cost of production? Also, the given prices of the different goods, how do they choose from the products those the production of which offer them the maximum revenue, so that their profit is maximized? This is the study of production. Just mark it till here. Now, what are they saying here? If a producer is there, suppose a person is there who is running a company. Now, what does he want? First thing, he will definitely purchase such kind of raw material or employ such kind of people, so that his cost will be less. The first thing, he will try to reduce the cost of production. Then second thing, the producer will definitely try to make those articles which will provide him lot of revenue, not lot, at least adequate revenue or profit, so that again that profit can be reinvested into the business. Okay, so here two aspects are very important from the producer's point of view. First, cost reduction, and then second is profit maximization. So this is the theory of the production, how it should be done. So this is how we study the theory of production, how to use the resources inside the firm, and how we can means how the producer can maximize his satisfaction. Definitely a producer will be satisfied only when he will be getting profits. Okay, now distribution means generation of income will be distributed. I will tell you how. As students of economic, we are also interested in knowing how income generated in the process of production is distributed among those who have worked against agents of production. So definitely we want to know that how this income is generated. Okay, so we as a student of economics, we want to know that how this distribution process happens, like income is generated, people get the income, so how it is possible. So who are the agents of production? These are the owners of factor of productions: land, labor, capital, and entrepreneurship. So these are the factors of production. Factors of production. We call them factor of production. Which things? Land, labor, capital and entrepreneur. Land, labor, capital and entrepreneurs. So they are the owners of factor production, because when the company needs something, like suppose company needs land or labor, employee, capital, money, or entrepreneurship means skills of the entrepreneurs. So it is present in the society and it will be used. So from the household sector to the producer sector, all these resources will be moving, and company is going to use all kind of resources. Now in return they will be getting their reward. Like on land, what we get? On land we get rent, on labor we get salary, wages, capital we get interest, entrepreneurship get profits. Okay, so here a part of income generated will go to the owners of the land. So if a company is earning profit, so what it is going to do? It is going to pay the rent. Okay, similarly they are going to pay the salary, wages. So out of their income which is earned, they are going to give them the rewards. So this is how the income is distributed among the factors of production. Okay, here a part of the income generated will go to the owners of the land used in the production in the form of rent. A part will go to the laborers in form of wages or salaries, as a part will go to the owners of capital in the form of interest, as I told you, and a part will go to the entrepreneur in the form of profits. Distribution of the income refers to the distribution of GDP among the owners of the factor of production. So whatever the income is generated, what is GDP? The value of goods and services produced. So whatever the income is generated, actually it is distributed among the factors of production. So this is how this is called as the distribution phase. Okay, this was another factor. Now the three distinct component of the economic activity: consumption, production and distribution. All these three concepts should be reminded, because these are just a part or component of the economic activity: consumption, production and distribution. So that's all for today. We'll be continuing in the next video, and we will be learning about what is the statistics. Till then, thank you.